Good day, students. Once again, this is another record of my videos in the topic close cooperation, one of the past exam, which is the 2011 question paper. It's question 1 out of 70 marks, but as usual, my main focus will be on the calculations, mostly the financial statements of a close cooperation, referring to the statement of comprehensive income, the statement of changes in equity for a close corporation, and the statement of financial position for a close corporation. Question 1 says Softhart close corporation, and the trial balance is at 30th of September in the year 2011, which then that becomes the end of the accounting period. And whenever there's a trial balance, then I know that financial statements will be required. And my main focus is to check exactly what am I required, just to confirm that financial statements are required. First requirement is to do the general entries to record the vehicle's contribution by Membersoft and consider note number 1 and the relevant information in the trial balance. Narrations and dates may be omitted. Prepare, secondly, the stationary expense account and properly close it off, and consider only note number 5 and the relevant accounts on the or in the trial balance. Dates and narration still not very important, can be omitted. Requirement number 3, prepare the following ledger accounts: accumulated depreciation and asset disposal, and the information is provided in the relevant notes. That is not my main focus. I will answer those small questions, but my focus is on the bigger picture or the bigger questions. Questions that have 18 marks becomes my main focus, where I have to prepare the statement of comprehensive income as at 30th of September. This is the first requirement that I'll respond to. Then after, do the general entry for the interest for the income tax expense and consider only note number 8. If time allows me, I will record that where necessary. Then after we go to number 6, it says consider all the relevant information and prepare the statement of changes in equity. This is the second main focus in terms of the requirement. And the last requirement, or the one before the last, is number 7, where I have to do transaction with members, property, plant, and equipment. This will also depend on time availability. If I do have enough time, I'll just go there and complete the PP note out of 10 marks and transaction with members out of 14 marks. I'm honestly not sure if I will have time to complete this one. But one that I'm sure of, which I need to amend, is to compile not only the current asset section of the statement of financial position, but to compile the statement of financial position. So I will be compiling the entire statement, meaning these marks will no longer be 5 marks, but above 10 marks in terms of calculations and my workings that I will do. So now this is my main focus, meaning this becomes the third focus. Then after, I can say this will be the fourth focus. Then all the small questions along the way, I will be responding to them as I'm responding to the big question. So I know that statement of comprehensive income is there, statement of changes in equity is there, and the statement of financial position is there, and that is my target. Then while I'm responding to the bigger question, I will also be answering the small questions along the way. So now my first approach to respond to the financial statements is always starting by recording what is given from the trial balance. So now, because I know that I will be doing the statement of comprehensive income, then I start with the statement of comprehensive income. And this is statement of comprehensive income for the year that ends 30th of September in the year 2011. Then I know that this statement starts with sales. Then after I have cost of sales. After cost of sales, the difference between the two will be the gross profit. Then after the gross profit, I will have other incomes. Then under other incomes, there might be interest on a loan given to a member, which is interest income, because the minute we give a loan to a member, that will arise to the interest income. Then after, we have to deduct expenses, less all the expenses that are relevant. And part of these expenses are the one that are in the trial balance, or all of them. Then let me start recording the amount of sales first. Sales, it is an amount of 1,400,670. 1,400,670. Then the second amount is the amount of the cost of sales. I take my cost of sales as they are 248,440. 248,440. And from here I can calculate my gross profit. 1,400,670 minus 248,440. And this gives me 1 million. Just confirm, 1,400,670 minus 248,440. Confirm that 284,000, not 248. 284,000. 284,000. 284,000. Just want to confirm the accuracy. 284,440. So it's 1,116,230. So meaning this is 284,000, not 248, 284,440. Then I get to 1,116,230 rands. Then I look for any income that is appearing in the trial balance. Scan under my expenses and income, interest income on a loan to a member. There was a loan given to a member and 820,000 rands was the interest that was already received. There might be an accrued portion or there might be a prepaid portion, I don't know. Then after, under my, this is under other incomes, 820. Then under my expenses, then I list all the expenses as visible in the trial balance. Under my expenses, I have credit losses, and credit losses is 51,200. Credit loss 51,200. Credit loss 51,200. Then the second expense of 52,100. Don't know why am I twisting figures around. 52,100. Then the next expense is admin plus selling expense, 2,260. Selling plus admin, 2,260. That is the selling and administration cost. The next expense is the interest expense. I'll consider this later at the bottom. Then salaries and wages that were paid already to the employees, 145,680. Salaries and wages. Salaries plus wages, 145,680. 145,680. Then I look for another expense. Another expense, it is stationery or salaries that we paid to the members. Salaries to members, 154,000. Then I'll have stationery as 2.5. Salaries to members. And these are the salaries to members of the closed corporation. 154,000 rands is the total amount. Then after I have stationery expense, and my stationery expense is 2,500. I also have to look at the stationery opening balance. If was there any opening balance of the stationery as an asset that need to be reversed into stationery expense account, and I think I did have opening balance of stationery, inventory of stationery, opening balance beginning of the year. So now stationery, when it is treated as an expense at point of acquisition, then at the end of the year becomes an asset, then beginning of the year we reverse that, or we transfer it from an asset account into an expense account. So now that 500 must be recorded as a plus in our stationery expense. Then whatever stationery is left at the end of the year becomes an asset, and that asset end of the year get to be an opening balance, and it will be then transferred into an expense account. So I must expect some stationery left at the end of the year. Not forgetting that there is depreciation that needs to be accounted for. And also, because this is an asset disposal, there was a loss on disposal, not a profit. So now I already know that there was a loss on disposal. Therefore, now I can say loss on disposal of the asset. Remember, the disposal of an asset can result into a profit on the disposal. Then if there was a profit, then you are supposed to record there as profit on disposal under other incomes. Therefore, now that will be a profit on disposal of an asset. So now we go to the next entry. Then we proceed on that same note. Then the last item that we need to provide for it is the finance cost. And the finance cost is the interest on a loan that was from a bank, or interest on a loan that was from a member. And there was interest that was paid on a loan from a member Soft, and that is 2,260. And I think I recorded this figure somewhere, 2,260, and it was not belonging there, because the interest that was received was 820. I think I recorded the 2,260 somewhere incorrectly. It was selling and administration. Selling and administration expense. Selling and admin expense was supposed to be 52,100. That is what was supposed to be selling and administration expense, 52,100. So selling and administration expense, where is my selling and admin? 52,100. Sorry for that. Maybe you have identified that already. Selling and admin. No, my selling and admin was, yeah, selling and admin 52,100. Then let me look at the credit loss. There is something that I incorrectly recorded. My credit loss is 1.9. Yes, that's where I've made a mistake. My credit loss is 1,900. Apologies for that. If you have identified, no problem. Then my selling and administration expense is 52,100. And depreciation not yet there. My finance cost is 2,260 rands, and perhaps I am just rushing for time now. I'm just making those silly and small mistake, and I pray that I will identify them before the end of the question. Then now we go to the next item, and the next item will be the profit before tax. It will be the profit before tax. Then after we get to tax expense, we get to taxation expense. Then after there will be net profit for the year. This will be net profit for the year. And net profit for the year is before the other comprehensive has been taken into account. Then we have other comprehensive income. And other comprehensive income, we have revaluation surplus. Then we get to the total comprehensive income. Total comprehensive income. Then that becomes the end of the income statement. Then now we have accounted for the expenses that were supposed to be accounted that are already given in the trial balance. Then we go to the next statement, which is the statement of changes in equity for a closed corporation. Statement of changes in equity for a closed corporation. Statement of changes in equity for the year end. For the year end 30th of September in the year 2011. We know that this starts with the members' contribution. We have 2 members, and our 2 members are Soft and Hart. Then we divide our statement into the 2 columns of the number of members that we have. Then the next column will be revaluation. Then we provide a column for revaluation. The next column will be retained earnings. Then after retained earnings, there can be general reserves. Where there are general reserves, provide for general reserves whenever they are given. But in this exercise, we do not have general reserves. Then after, we'll have the total column. Don't forget that we start with the balance. And the balance is on the 1st of October in the year 2010. That is the opening balance for the current year. Then after let me check for the opening balance for retained earnings or members' contribution. Retained earnings, we are given opening balance, and the opening balance is 19,000 rands. And we also have members' contribution opening balance 750,000 rands. Remember, this still has to be split into the members' interest, and I can immediately look at the members' interest 40% and 60%. This is always very, very visible. So now let me just split my members' contribution into 40% and 60%. 0.4 times this by 750,000 rands. This gives me an amount of 300,000 rands, meaning the opening balance for Soft is 300,000 rands. Then this will give us a total of 450,000 rands to make it 750,000 rands. Then we have 19,000 as the opening balance of retained earnings, and that will be an opening balance of retained earnings. Revaluation opening balance is 50,000 rands. Then let me write the total, which is 750,000 rands of the total contribution plus 50,000 plus 19,000. Then this gives 819,000 rands at the total opening balance. Then from here, I can do my statement of financial position as at 30th of the month of September in the year 2011. I know that this statement starts with the assets, and my assets are classified into non-current, then after current. Under non-current, I know that I have property, plant, and equipment note. This is where most of the calculations will be. I will be doing most of the calculations here. Then now I go to my property, plant, and equipment, and I can see that land and building cost 1,240,000 rands, taking only what is the trial balance, 1,240,000 rands, plus the motor vehicles that appear in the trial balance. My motor vehicles in the trial balance, they amount to 520,000 rands. then I record that 520,000 rands. Remember, if there was a disposal of any motor vehicle, that disposal has not yet been accounted for. So now we still, if it's not yet accounted for, we still have to account for that disposal or acquisition during the year, similarly to the previous video I recorded on the 2010 exam for November for the close corporation. 46,200 is the accumulated depreciation that is in the trial balance. Therefore, now we can say minus 46,200 rands is the accumulated depreciation. Remember, revaluation also has to be accounted for. Then now I can come and say my current assets is made of the inventory. Then I need to look at my types of inventories. There is inventory of trading stock and there is inventory of stationery. Now, inventory of stationery is at the beginning of the year, but inventory of trading stock is at the end of the year. So now I need inventory at the end of the year, 45,500. So now 45,500. If there is inventory of stationery that was left at the end of the year, that will be added to that inventory of trading stock of 45,500. But so far, I don't know how much is my inventory of stationery at the end of the year. I only know the opening balance, which was transferred into the stationery expense account. I'm also taking into note of the things that I have recorded. Very crucial to be mindful. My bank is unfavorable, so it will not be under current assets. Then let me record my accounts receivables. My accounts receivables is an amount of 123,500. 123,500 is my accounts receivables. Then accounts receivables is 123,500. Then there might be a bad debt, there might be accrued income. There's still a lot to be recorded there. Then another item that will need to be recorded is a loan that was given to a member. Loan to a member, opening balance was 8,900. So now this must be recorded as an asset because this member owes us an amount of 8,900 by beginning of the year. There might be a loan repayment during the year, but so far we don't know. If there was the loan repayment, that will need to reduce this loan balance. Then after we go to the liability section of the statement of financial position. And the liability section of the statement of financial position is made of equity and liability. Equity and liability. And we start with the amount of equity. Then after we have our liabilities. Then under our liabilities we have non-current. And there's nothing that I saw in the trial balance that was a long-term loan. Then after we come to the current liabilities. Then let me just confirm that there was no mortgage bond or there was no loan. And honestly, there was no mortgage bond or there was no long-term loan. So I will be starting with trade and other payables amounting to 169,850. 169,850. Trade payables. My trade payables 169,850. Confirm that. 169,850. Next to that will be the bank overdraft. Bank overdraft is 55,000 rands. This is unfavorable bank balance. Bank overdraft, it is 55,000 rands. Then after, we need not to forget that there is SARS VAT control. It was just next to this one. The amount of VAT that we owe to SARS by the end of the year, and this will be the difference between input VAT and output VAT. Then we have SARS VAT control, SARS VAT control, there is SARS VAT control. The amount we owed to SARS was 146,500. 146,500, 146,500. But there's nothing else to be recorded regarding SARS VAT control, 146,500, because we don't have VAT in this topic. Then another item that I might need to consider is the fact that there is SARS provisional tax payments, meaning tax that was paid, which is we paid an amount of 83,260. Let me just go in the trial bar in the adjustments and look for the tax that was supposed to be paid during the year. Just scanning down. Inventory, no record included. This is bad debts. They provide for the income tax expense 120,000 rands. So now we're supposed to have paid 120,000 rands because that was what we estimated to be tax expense, but we only paid 83,260. So the difference means we still owe SARS the difference of the two. Therefore, now this will be SARS current tax payable. SARS current tax payable. And SARS current tax payable will be 120,000 rands minus 82,310 or 83,260, just to confirm. Yes, 83,260. So now it is 83,260 rands. And the difference will be the liability that we owe to SARS. 120,000 rands minus 83,260. Then this will give us 36,740. Now we can immediately record the tax expense in the income statement because we know that tax expense gets to be recorded in the income statement as 120,000 rands. So minus one of the adjustments that we have already accounted for. So now we have taken that into account in all the statements that it was supposed to be recorded. Then I go to the next item. There was a loan that was previously we had a loan to a member, which was an asset. Here we have a loan from member. A loan from a member. We need to check how much was the loan from one of the members in the trial balance. There was a loan that was from one of the members, and the amount of this loan is recorded on the credit side. Loan from a member, we can see there is 22,000 rands. It's an opening balance. Remember, there might be a repayment. So now we record that 22,000 rands as a loan from this member. Then we have accounted for all that is necessary for recording from a trial balance perspective. There is one thing that I have to account for under my accounts receivables. There was an allowance that was recorded already in the trial balance. Allowance for credit losses amounted to 4.5. So now I can immediately say minus 4,500 under the accounts receivables, so that I will only record the increase if there was an increase in the allowance by the end of the current year. So now from here, I can record all the adjustments respectively from the first adjustment to the last adjustment. And when I'm done, I will be done and just balance everything as it should be. Just to scan to make sure that all has been recorded. And really all entries have been accounted for that appear in the trial balance. Then after, let me start with the first adjustment. First adjustment is telling us that Soft and Hart share the interest in the close cooperation as follows. Soft 40% and Hart 60%. And this was used to calculate the opening balance of the members' contribution, which was 750,000 rands, and that was split and recorded in the statement of equity as 300,000 rands and 450,000 rands. So now I did respond to that adjustment, first part of this adjustment. So now I go to the second part of the same adjustment. Then it says, on the 1st of January in the year 2011, member Soft increased his capital or his interest by contributing a vehicle, which is vehicle C, to the value of 240,000 rands. And this transaction has not yet been recorded in the books of the business. So now meaning we need to debit vehicles, and the value of the vehicles is 240,000 rands. Then after we say members contribution, we record the same amount. For every debit entry there is a credit entry. The question is, who contributed this? It is member Soft. He is very soft and his softness made him to contribute. So now this is member Soft. The value is 240,000 rands. Therefore now our motor vehicle in the statement of financial position should be increasing by 240,000 rands. Then I add that 240,000 rands there. Remember, the cost of my motor vehicles in the trial balance was given to me as a total of 520,000 rands. And that 520,000 rands was not including the cost of the vehicle that was contributed during the year, that was worth 240,000 rands. Then now I need to go to the statement of changes in equity. Then I write contribution, because this member contributed to the vehicle worth 240,000 rands. So now that will be the amount that needs to be recorded, 240,000 rands. And this contribution only goes up to the total column, 240,000 rands will be the amount. So now this has been accounted for and is done, recorded to all the financial statements as it's supposed to be recorded. Then after we go to adjustment number 2, where we are told that vehicle A was bought on the 1st of October 2009. Remember, this is 2010 accounting period, if I may say so, because our accounting period starts on the 1st of October each and every year. And once again, we are doing the books for the year that end in the 2011 accounting period ending 30 September 2011. So now previous year, a motor vehicle was bought beginning of the previous year, which is the 2010 accounting period that started on the 1st of October in the year 2009. And the cost of this asset was 150,000 rands. It was bought, and they say that the following still have to be recorded in connection with the vehicles. So now that needed to be recorded in connection with the vehicles, meaning, and they further say to us that on the 31st of January 2011, remember, 2011, vehicle A was involved in an accident and sold a scrap for cash. How much was cash? Cash was 35,000 rands. So now if this was sold for cash, I need to immediately record the cash part of this transaction. If this was cash, meaning bank was increased by 35,000 rands, then after asset disposal was recorded on the credit side as 35,000 rands. Remember, the trade-in value or the price by which an asset is sold for is recorded on the credit side of the asset disposal ledger account when we do the asset disposal. So now our bank account will be reduced by 35,000 rands. And the reason why bank account decreases is because bank is an overdraft. So now this becomes a minus, not a plus. If the bank was an asset recorded under current assets, then this will be a plus 35,000 rands. Now we have accounted for that. Then we go to the same transaction. I just wanted to make sure that I record the cash aspect of this transaction. Now we are very aware that this vehicle is included in this opening balance. The opening balance of 520,000 rands is both vehicle A and vehicle B. And vehicle A was not yet recorded, but it was traded in during the year because of the fact that it was involved in an accident. So now meaning in my statement of financial position, I need to remove the vehicle that was disposed during the year. Therefore, now I need to say minus 150,000 rands. So now let me just draw a line here and calculate the value of my assets by the end of the year, assets specifically referring to my vehicles. 240,000 rands was the contribution made during the year, which was not included in that opening balance, and 520,000 rands was an opening balance minus 150,000 rands of the vehicle that was sold during the year, meaning my total assets in terms of vehicles by the end of the year, cost of the vehicles at the end of the year, will be a total of 610,000 rands. Remember, in the PPE note in the statement of financial position, I am looking for the carrying amount of the assets that are still in the business by the end of the year. And the cost of the assets of 610,000 are still in the business by the end of the year. Then after, I need to minus their accumulated depreciation so that I get to the carrying amount at the end of the year of my motor vehicles. So now let me leave these calculations as they are, then I will come again and clarify you very further. Now again, in this transaction, we just have to go back. We were told that this vehicle was bought on the 1st of October in the year 2009. So now meaning the accumulate or the depreciation for this year, which is the year 2010, started 1st October 2009, was recorded. So now the question is, how much of the depreciation was recorded in that opening balance? So now I don't know yet how to calculate my depreciation. Let me go then to number B of the same entry. Number B says provide for depreciation on all vehicles, all of them, not some of them, at 20% per annum on cost for the current financial year, meaning this is the straight line method of calculating depreciation. So now if I want to calculate my accumulated depreciation for motor vehicle A, I'm focusing only on vehicle A. Then for the year 2009, which is the year 2010, because it was there in the year 2010, started 1st October 2009, ending 30 September 2010. The cost of this asset is 150,000 rands, and there is no residual value. Then if I multiply this by 20%, it will give me to a depreciation, in fact, accumulated depreciation of 30,000 rands. This 30,000 rands is the opening accumulated depreciation. I don't know why now what this tablet is doing. Accumulated depreciation for motor vehicle A for the year 2010. The cost of vehicle A is 150,000 rands. Multiply this by 20%, I get to an amount of 30,000 rands. This is the accumulated depreciation that is included in the opening balance. Accumulated depreciation included in that opening balance of the accumulated depreciation calculated as 46,200. Remember, I don't want to see the accumulated depreciation at the end of the year in my financial statements. And because I already know that included in that 46,000, it is 30,000 rands. So now meaning I need to remove this 30,000 rands and say plus 30,000 rands. I am removing the 30,000 rands that is inside the 46,200 rands, because the 30,000 of the accumulated depreciation for vehicle A must be removed, as this vehicle was disposed during the current year. So now I have accounted for the cost of the disposed asset. I have accounted for the opening accumulated depreciation of the sold asset. Then what I need now is the depreciation of this asset in the year 2011. In the year 2011, remember, this will be 150,000 rands. Times this by 20%. It will give me 30,000 rands as the total depreciation for the year. But I need to consider the number of months. This vehicle was sold at 31st of January 2011. Remember, it was in the business from October 2010, November 2010, December 2010, January 2010. Then it was sold at the end of January, in fact, 2011. It was October 2010, November 2010, December 2010, January 2010. So now it was in the business for 4 months out of the 12 months, meaning the depreciation for this asset that was disposed must have been 10,000 rands for the current year. Then now the total, be mindful of that, total accumulated depreciation for this vehicle at 30th, in fact at 31st of January in the year 2011 up to the end of the current year, it was 40,000 rands. That is the total accumulated depreciation up to the date this asset was disposed. So now this is what needs to be written off in the accumulated depreciation ledger account. I will show you that now. Depreciation for the current year 2011, it is 10,000 rands. So now I can record the depreciation in the statement of comprehensive income. Under my depreciation, I can record 10,000 rands with confidence because I've proven that. Remember now, I have to calculate depreciation for all other vehicles. There was vehicle C that was worth for 240,000 rands, which its depreciation for the current year has not yet been accounted for. So now I need to account for such depreciation. Now let me then do the calculation for that. Remember, motor vehicle C was in the business starting on the 1st of January the current year. So now the asset must have been in the business January, February, March, April, May, June, July, August, September. It must have been in the business for 9 months in the current year. So now I need to say 240,000 rands. I am calculating depreciation for vehicle C. Depreciation for vehicle C is 240,000 rands. Multiply this 240,000 rands by 20% because my depreciation is 20% on all vehicles. Then multiply this by 9 over 12. Let me check how much is the correct depreciation. 240,000 rands times this by 20% equals times this by 9 over 12. It gives me 36,000 rands. And 36,000 rands is the depreciation for the new asset that is still in the business by the end of the current year. And I do want to record my depreciation in the statement of financial position for the asset that is still in the business minus 36,000 rands. But please don't record depreciation for the disposed asset in the statement of financial position, because when you record a depreciation for the disposed asset, that becomes wrong because that asset by the end of the year is no longer in the business. Hence, we also removed that 30,000 which was opening accumulated for the disposed asset. Only for the asset that are still in the business, you need to record their depreciation for the current year under the PB note. Then now I have recorded this. I need to know if how much is the cost of the remaining motor vehicle. The remaining motor vehicle, which is old vehicle, vehicle B, will be the cost of 520,000 rands minus the cost of the disposed asset. May remember, motor vehicle A cost is 150,000 rands. And if I say 520 minus 150, this will give me 370,000 rands. This is the cost of motor vehicle B that is left in the business. So now I can calculate my depreciation for motor vehicle B, and it will be 370,000 rands. Multiply this by 20%, and let us check 370 times this by 0.2. It gives us 74,000 rands. 74,000 rands is the depreciation that need to be recorded both in the statement of financial position minus 74,000 rands. I'm just doing this for the space purposes. Then I need to record this depreciation in the income statement. Then in the income statement, say plus 74,000 rands. So now this becomes the total of my depreciations. Then I have recorded all the depreciation, 74 plus 36 plus 10. This gives us 120,000 rands. The total of the depreciations for the current year. Now, I just want to bring you to a different approach in terms of how to calculate all this long calculation that I've been showing you throughout. When it comes to the vehicles, remember, let me just change the color to black. This is vehicles. I'm just doing my workings. Vehicles at cost. This is the cost price of the vehicles. Vehicles at cost. So if I say vehicle C plus opening balance minus disposed vehicle, this gives me 610,000 rands. Therefore, now this becomes the cost of my vehicles at the end of the year, 610,000 rands. So now meaning, if I want, I can just erase all these calculations. I just say the value of my vehicles or the cost of my vehicle by the end of the year, it is 610,000 rands. Please, for exam purposes, when the property, plant and equipment note is not required, write all the figures as I did show you. Write all these calculations because you will be given marks for the individual amounts. Unless the PP note is a requirement, therefore now you only have to write one amount, carrying amount, after the accumulated depreciation has been accounted for. So please, if you are not required to do the PP note, leave these calculations as they are, just like as they are scattered, and you'll be getting marks for all these numbers that you have. This is normally 6 marks or even 7 marks. So you can get those numbers as much, or those marks as much as you can. I'm just showing you the simple version for the sake of the neatness in my workings or in my calculations. So now please show these workings as you can. Then let me proceed now. As I said, this is the cost of my vehicles at the end of the year. Then I also need to know how much the cost of my accumulated depreciation at the end of the year. The cost of my accumulated depreciation at the end of the year, this is 46,000. Yeah, the cost of my accumulated depreciation end of the year will be the sum of all these calculations. Then let me show you the accumulated depreciation at the end of the year, that it is 46,200. 46,200 minus 30,000 plus 74,000 plus 36,000. So my total accumulated depreciation at the end of the year is an amount of 126,200. Remember, all the ones that are positive should be added together. This one and this one and this one should be added together, and the one that is plus should be deducted, or however way you decide to use. So now I have added 46,000 with 36,000 and 74,000, and I deducted 30,000, which is the opening accumulated depreciation for the disposed asset. Therefore, now that means if I want to know the carrying amount of my vehicles by the end of the year, I can say the cost at the end of the year minus the accumulated depreciation at the end of the year. That will give me the carrying amount. Minus 610,000 rands. This gives me 483,800. So this is the carrying amount of my vehicles at the end of the year. And this is the only amount that you will be recording if you are doing the property, plant and equipment only for the column of vehicles, in fact. So now I'm doing this comprehensively. Then after, I will show you all the workings in a ledger account point of view, so that you can see this from a ledger account point of view. So now I am doing the vehicles at cost ledger account, so that everything that I have just explained to you, you can see it from a ledger account perspective. Therefore, now we have the balance, and the balance of my motor vehicles is 520,000 rands. There was a contribution of motor vehicles during the year, and the contribution of these vehicles amounted to 240,000 rands, where Membersoft contributed that, and motor vehicle A was disposed. Therefore, now asset disposal will be recorded on the credit side, and this vehicle was costing 150,000 rands. And there was no other purchase or disposal of the item of motor vehicle. Therefore, now I can close this ledger account and balance it. Then we have 520,000 plus 240,000. This gives us 760,000 rands. 760,000 rands. Then after there will be a balance carry down, and balance carry down will be minus 150,000, no, minus 150. This gives us 610,000 rands. And this 610 seems to be a very familiar figure. The 610,000 is looking or sounding very familiar. Balance brought down. The 610,000 was the total cost of my assets at the end of the year that I calculated previously. Then after I do my accumulated depreciation ledger account, accumulated depreciation on vehicles for all vehicles, and my accumulated depreciation had an opening balance on the credit side. And this opening balance was 46,200. Then now I have to record depreciation for the current year. And my depreciation for the current year, I think it was 120,000 rands as per income statement. Depreciation was 120,000 rands. Yes, that figure is accurate. 10,000 plus 36 plus 74,000 was where this was coming from. 10,000 plus 36,000 plus 74,000. So now that became the depreciation of 120,000 rands. You really need to show all these workings, plus 36,000 and all these calculations, plus 74,000, more especially when this ledger account is a requirement. Then now there was an asset that was disposed, and that was asset vehicle A, and we need to remove the entire accumulated depreciation for vehicle A. And remember, included here is 30,000 rands of the opening balance of vehicle A that was there in the opening balance. And included here is the 10,000 of the depreciation for vehicle A, meaning now vehicle A total accumulated depreciation up to the date it was sold was 40,000 rands. Therefore now we can balance this ledger account. There's something that I'm just reminded of, the calculation of the profit or loss on the disposal of vehicle A. I will do that immediately after this one. Then, or I can just do the asset disposal ledger account. So now the bigger side will be 46,200 plus 120,000 rands. This is 166,200. 166,200 minus 40,000 rands, and this gives 126,200. And this figure also is a very familiar figure. Balance carried down 126,200, and balance brought down the same figure 126,200, and this is balance brought down. 126,200 was the total of all the accumulated depreciation by the end of the year, 126,200. Therefore, now if we say 610,000 minus 126, we get to the carrying amount. Same in the ledger account. Closing cost of the vehicles minus closing accumulated of the vehicles will give us that carrying amount of the vehicles at the end of the year. Now, the last ledger account that I'm very tempted to do is the asset disposal. And when this is not required, let me start with the normal calculation of loss or profit. Now I want to calculate loss / profit on disposal of vehicle A. On disposal of vehicle A. Then we know that we need the carrying amount first. The carrying amount will be the cost of 550,000 rands minus the total accumulated depreciation up to the date motor vehicle A was disposed. And this will give me 110,000 rands. Then the selling price, which was cash selling price, was 35,000 rands. And we can discover that we really made a very huge loss. 120 minus 35 will give 110 minus 35 will give 75,000 rands. And this will be loss on disposal. So now when the ledger account of asset disposal is not required, you can just record this in this point of view, and you record that immediately in the income statement under loss on disposal as 75,000 rands, and this will be recorded as negative. Then after we do the ledger account, not being ignorant of the significance of the asset disposal ledger account. Then the asset disposal ledger account. Asset disposal ledger account, on the debit side we record vehicles at cost, which is the cost of the asset that was sold. On the credit side, we record the accumulated depreciation for the sold asset. And on the credit side, we record the amount by which this asset was sold for, which is bank. Then on the credit side, we record loss on disposal, because we already know that this is the loss. And how do we identify or calculate that loss? We just look at the bigger side, and the bigger side is debit side 150,000. Then after we say 150,000 minus 40,000 minus 35,000 minus 35,000, this will give us the difference falling on the credit side as 75,000, meaning a loss on disposal. So now I'm already responding to some of the questions that you had or some of the requirements. So now here I will erase these workings for the sake of the neatness of my calculations. Otherwise, if a property, plant and equipment note is not required, please don't erase these workings. So this will be plus 610,000 rands minus 126,200. Then this will be the best way if the property, plant and equipment note is not a requirement. I want to emphasize on this very regularly. Now, in this question, PPE was required. PPE was required, and I will let me first complete the rest of the question and see if I have time to go through the PPE part. Then if I still have time, I will record the PPE as the time will allow me, if that time will be available. Let me first sit and complete all the other requirements. So now we are completely done and dusted, unless there's something that I forgot regarding adjustment number 2. Adjustment number 3 says that interest on a loan to and from members are calculated at 12% per annum on the opening balances. Provide for the outstanding interest. Now, providing for the outstanding interest at 12%, we need to check how much were the loans that were given to members. Remember, we have already noted that interest was already paid and another interest was already received. So now these are the two interests that we are focusing on. We start on a loan that was from a member, and a loan from a member will arise to interest expense. 22,000 was the loan. We multiply this by 12%. It will give us interest that was supposed to be paid. So we say 22,000 times this by 12%, meaning the amount of 2,640 is the interest that was supposed to be paid. But when you look at the interest that was paid in the trial balance, it is a different figure. We only paid 2,260. So the difference will be minus 2,260, and the difference will be 380. We paid 2,260 instead of 2,640. Therefore, now this difference will be called accrued expense. And we know that accrued expense is a liability. So now let me record a general entry for that accrued expense. Then we debit our finance cost or interest expense, 380, and we credit accrued expense. And the accrued expense is 380. Then now under my finance cost, I need to increase my finance cost by 380 rands. Then I go to my finance cost in the statement of comprehensive income. Then in my finance cost, I say plus 380. And the total will be 2,640 as my finance cost at the end of the year. Then the accrued part, remember, is a liability, and accrued expense is a short-term liability or a current liability. Therefore, that 380 will be recorded under trade payables in the statement of financial position under current liabilities. Then I have recorded the finance cost. Then I need to record now the interest income aspect of the loan. Loan to a member will arise to interest income, and the loan was 8.9, and 12% of that is the interest that is supposed to be received. So now we say 8,900 times by 0.12. This will give us 1,068 rand. This is the interest that was supposed to be received. But how much interest did we receive? We only received 820 instead of 1,068. So the difference will be accrued. So now we say minus 820, and an amount of 248 will be accrued income. And accrued income, we know that it is an asset. Accrued income is an asset. So now let us do the journal entry once again for this accrued income. Previously we had accrued expense, which was a liability. So now we debit our accrued income. Remember, assets increase on the debit side and liabilities increase on the credit side. Accrued income of 248 and interest income increasing on the credit side will be our debit and credit entry, 248. We said accrued income is an asset, therefore now this should be recorded in the statement of financial position under our current assets. Under trade and other receivables, we should be saying there plus 248 rands. Then in the income statement, which is statement of comprehensive income, under my other incomes, there must have been other incomes of 820. I add 248. Then after adding, this will give me 1,068 rand as my interest income. Then after, I proceed to the next adjustment. Next adjustment is adjustment number 4, where I am told that the member's salary per month is 8,000 and 6,000 respectively for soft and hard. Multiply this by 12 because these members worked in the cross corporation for the entire period of 12 months unless it was stated otherwise. So now 8,000 multiply this by 12, it gives me 96,000 rands, and 6,000 multiply this by 12, it gives me 72,000 rands, meaning the salaries that were supposed to be paid to the two members by the end of the year is the total of 72,000 and 96,000, meaning what was supposed to be paid is 168,000. Let us check how much was paid already. How much was paid was from the trial balance, and it was 154,000 rands instead of 168,000. So now we paid less than what was supposed to be, so the difference is accrued. Then we minus this 154,000 and we discover that 14,000 was accrued. 14,000 is the salary for 1 month of 8,000 plus 6,000, meaning salary for the last month has not yet been paid. Therefore now this becomes accrued expense. Then we debit salaries to members by 14,000 rands. Then we credit our accrued expense. Accrued expense being a salary, in this case 14,000 rands. So now we have recorded already the debit side. In the income statement, what need to be recorded is the accrued expense of 14,000 in the statement of financial position under current liabilities under trade payables. This should be a plus 14,000 rands. Then I add my 14,000 rands here. Then this will be what is to be recorded as accrued expense. Then after I go to the next adjustment, salaries, done and dusted. Don't forget that this salaries of 168,000 made of 96,000 and 72,000, meaning will be recorded under transaction with the members. And transaction with members, I'm very tempted to record this one now, as it is still fresh. Transaction with members, we record transactions that are between the CC and the close corporation. This is the note of transaction with members. Sorry to just drift away. While I still have this information, I need to account for it immediately. Transaction with members, it will be member soft and member hard. Then we have salaries. Under salaries, it will be 96,000 negative and 72,000 negative. Then there will be interest expense, and interest expense was to which member? Let me look at which one was interest expense. Interest expense will be from the trial balance, very easy. Interest expense will be interest paid on a loan on a member from soft. Yes, interest expense will be on member soft. And interest expense on member soft was 1,640. Let me confirm that to the from the income statement. The interest that was supposed to be paid, it was 2,640. 2,640, which was calculated from 22,000 times this by 12%, 2,640. So now this is what I'll be recording. Interest that was supposed to be paid, 2,640. Then interest income. Interest income is 1,064. So this becomes positive. This will be how we record in our transaction with members. If there's a total column, therefore now this will be 168,000. This will be negative 2,640, negative 2,640, and positive 1,064. So this will be transaction with members, and then that I have already accounted for that, and I am done already. So now let me just go and check where I was previously. Where did I stop? Okay. I think I have accounted for all that was needed to be accounted, which was from the transaction. Okay, I was tempted by the transaction with the members, and I have recorded the transaction with the members. Then now I have inventory at the end of the year, and this is inventory of stationery 30 September amounts to 400 rands. So now this is inventory. Remember, inventory is an asset. So if it's an inventory and it's an asset, meaning my inventory must increase by 400, so that my inventory total adds up to 45,900. Then I must reduce my stationery expense account. Therefore, my stationery must go down by an amount of 400, and this is recorded. Therefore, now the journal entry will be debiting stationery on hand, which is an asset, 400, and credit stationery expense by an amount of 400. This is the journal entry. Remember, there was an opening balance. I want to go there while my memory still says me. There was an opening balance of stationery. So now there was supposed to be a reversal, which I recorded that without a journal entry. The reversal was debit stationery expense. I just explained it in theory, that opening balance of 500, and I credit my stationery on hand. This is the entry that was supposed to take place for the opening stationery as an asset. We do reverse it, then at the end of the year, what is left becomes an asset. And this will be reversed again next year, where we credit the asset and we debit the expense account. So now that is the stationery aspect of this entry. Then now let me go to the next entry. Then the stationery is done and dusted. No entry has been recorded for the revaluation of land and building at 1.5 million. And our property plant or property or land and building is 1,240,000 rands. And they say it went up to 1.5 million. So the difference between the two will be revaluation. Minus 1,500,000 rands. For me, guys, it doesn't matter what to separate as long you know that either figure negative or positive, where to record it. 1,500,000 rands minus 1,240,000 rands. Therefore, now 260,000 rands will be the revaluation surplus. We debit property or land plus building by 260,000 rands and we credit revaluation. We credit revaluation by 260,000 rands. So now meaning our property in the statement of financial position should be increased, or property, plant and equipment line item should be increased by 260,000 rands, and this is the last entry to record here. Then in my statement of changes in equity, I need to have a line item called total comprehensive. Total comprehensive. And I record my revaluation as 260,000 rands, and I will leave it there. Remember, I still have to record profit for the year there, which is net profit before the revaluation was accounted for. So my revaluation is 260,000 rands. Then I'll get to my total comprehensive at the end of this accounting period. Then let me go to the next adjustment and see what the next adjustment has for me. Adjustment number 7, a very popular adjustment regarding bad debts. You will see also that in the previous video that I recorded in the 2010 exam, and very crucial for you to watch that video before listening to this one, because this one I'm a bit quicker than the previous one, because in the previous one I was still giving enough details, but the concept is honestly the same. Included in the trade receivables is a debtor who owed the close corporation 1.5, and he has been declared insolvent and received a check of 60 cents, meaning 60 cents or 60% of the 1.5. Remember, 60 cents is the percentage, is 60%, because there are 100 cents in the rent and a percentage is out of 100 in total. So 1.5 times this by 0.6, meaning 900 was received, and the remainder, remember, is 40%, and they say the balance must be written off as irrecoverable. So minus 1.5, meaning 600 will be the portion that was declared not to be received. Therefore now 600, which is 40% of that, is the portion that is the bad debt. Therefore now general once again, general will be debit bank because money was received, and the amount of bank will be the 1.5 after this has been multiplied by 0.6, which is 60%. That will give us 900 as we previously calculated. And our bad debt, we have said that it will be an amount of 600, which is 1.5 times this by the remainder of the percentage. Then our debtors will decrease by an amount of 1.5. So now our bank line item unfavorable under current liabilities in the statement of financial position should be decreased by 900. Then our debtors should be decreased by 1.5, account receivables. Then our statement of comprehensive income credit losses should be increased by 600 rands. So we are moving on the very good pace when the time is 1 hour 14 minutes. Then we are told that we must adjust the allowance for credit losses to 5% of the outstanding or remaining debtors. Remember, the amount of the accounts receivables in the trial balance was given to us as a total of trade and other receivables 123,500, and this 123,500 was before 1.5 of this debtor was declared insolvent. So now I want to calculate my allowance, or the new allowance. It will be 123,500 minus this bad debt of 1.5. Then I'll get to my remaining account receivables. 123,500 minus 1.5. It gives me 123,500 minus 1,500. It gives me 122,000 rands. Let me just confirm that it was 123,500. Then 5% of this figure will be an allowance for credit loss. Term this by 0.05. This gives me an amount. Term this by 5%. Then I get to the total of 6,100. So now my allowance by the end of the year is 6.1. Then I need to compare this with the allowance that is in my trial balance already recorded. My allowance for credit losses in the trial balance, it is 4,500. So now if I say 4.5 minus 6.1, this will give me the difference of the amount that need to be recorded, minus 6.5, and this will be 1,600 rands. So now the 1.6 is the one that is to be recorded in the income statement and also in the statement of financial position, plus 1,600 in my credit losses. Then in my statement of financial position, as I did explain it before, then this will be minus 1,600. Or else, if you wanted, you could have just add the two, which was the opening allowance plus the total, or the increased allowance total of 6.1, and just record one amount instead of separating the two figures. But still very right if you split them, because you'll be recording continuously or consistently. Then now we have provided for that allowance and recorded that allowance to where it is supposed to be recorded. Then approaching the end of the question, we go to the next adjustment, which is adjustment number 8. The minute the bad debt is done, then we're really approaching the end. Provide for the income tax expense of 120,000. We have already provided for that, and check if do we owe SARS or not, and we realize that we do owe SARS the difference, and we recorded SARS current tax payable as 36,740. And in the income statement, we should have recorded that taxation expense as 120,000 rands. So that entry has been accounted for, nothing to worry. The last entry is the members' contribution, which amounted to 110,000 for each member. Take note of that. So now members decided to distribute part of their profit of 110,000 to each of them, and this will give us 220,000 rands. Very important, there's a portion that is not highlighted in this question that says this distribution was not paid. This distribution was not paid, and that is the only portion that is left. This distribution was not paid by the end of the year. So now if it was not paid, meaning it is still accrued, and an accrued expense will be a liability recorded under current liabilities. But at the same time, we need to record this 220,000 rands in the statement of changes in equity as the distribution to the members of the closed corporation. So now we go to the statement of changes in equity. First, and our statement of change in equity, we record the distribution. And the distribution will be negative under retained earnings minus 120,000 rands. Because there is nothing that says this amount was paid. So now that means we will be recording this as an accrued expense, meaning under current liabilities as a separate line item, distribution accrued. This will be distribution payable. Distribution payable, meaning distribution not yet paid, 220,000 rands. Remember, if the distribution was paid but not yet recorded, therefore now we'll have to record that and reduce our bank account. But this distribution was not yet paid, hence I'm saying distribution payable under current liabilities. And obviously we had an unfavorable bank balance. There will be no way we can pay 220,000 rands, yet we are running at a balance of 55,000 rands. So that is going to be very unlikely. And remember, this entry was not yet recorded. So now I have recorded the last adjustment. Then after the last adjustment, I can just bring all my totals together, then totalize, then balance my statement of financial position. There was no repayment, meaning the loan that was from a member is still an amount of 22,000 rands. Then after do my bank account, which is 55,000 minus 35,000 minus 900, 55,000 minus 35,000 minus 900 of the cash from the data, 19,100. Trade payables 669,850 plus 380 plus 14,000 rands, and this is 184,230 rands. Therefore now this will be the total of the current liabilities. Total of the current liabilities plus 19,100 plus 146,500, which was as current tax payable, plus 36,740 plus 22,000 plus 220,000. This is 628,570. Then let me just balance all that I have here, 8,900. Then my accounts receivables 123,500 minus 6,100 minus 1.5 plus 248. This is 116,148 plus 45,900 plus 8,900, and that gives a total of 170,980. My property, plant and equipment is 1,500,000, which is the sum of the two is 1.5 million, plus 610,000 minus 126,200. This is 1,983,800, and the total of non-current is the same amount, 1,983,800 plus 170,980, which the total of the assets is 2,154,780. Then all that I need now is only my equity. My total liabilities is 628,570. Then I need to complete my income statement. 52,100. My total credit losses, it is 1.9 plus 600 plus 1.6, which is 4.1, and I have 145,680. Then I have 154,000, which is 168,000 in total. Then my inventory that was used, 2.5 plus 500 minus 400, 2,500 plus 500 minus 400 is 2,600, which is stationary at the end of the year. Then this will give me my total expenses excluding finance cost. This will be 4.1 plus 52,100 plus 145,680 plus 168,000 plus 2,600 plus 120,000 plus 75,000. Then after adding 75,000, this gives 567,480. Then I will say this is the negative figure. Then we have 1,116,230 plus 1,064 or 1,068 and minus 567,480 minus 2,640. This gives me profit before tax as 547,178 minus 120,000 of tax, and this gives me 427,178 plus revaluation surplus 260,000. This gives me 687,178. 687,178, which is before 427,178, 427,178, 427,178. Total comprehensive 687,178. Then I can have my balance at the end and transfer my balance to the statement of financial position. Here my balance remains the same, 450,000, and here it will be 440,000, and 260 it will be 310,000. Then my retained earnings column will be 19,000 plus 427,178 minus 220,000. This will be 226,178, and I will have to say plus 310,000 plus 450,000 plus 440,000. Then this will give me the total. Let's confirm that total. 819,000. Just calculate from here, 819,000 plus 240,000 plus 687,178 minus 220,000. This is 1,526,178 and should be the same when I calculate across. 440,000 plus 450,000 plus 310,000 plus 226,178. Then there must be a wrong column, which is 19,000 plus 427,178 minus 220,000. Yes, it's 226,000. Oh, this is 540,000, not 440,000. This is where I've made a mistake. 540,000. So plus 100, 540 plus 450,000 plus 310,000 plus 226,178. Yes, that is the correct figure. So I can record this one under my equity section, 1,526,178. And I've recorded everything, so I can just add the two plus 628,570. And this gives the total of equity and liability as 2,554,748. And it's exactly as my assets. So with that, guys, let me say thank you. PPE, please complete that at your time. Thank you. God bless you.